right. We were on this, like just like you have said, yeah. When you do this, you should pass the double entries. Credit to goodwill, it means you credit to goodwill and then we usually debit impairment loss. That's what we usually do, right? Credit
Yes.
and debit impairment what? Loss. But
Yes.
you can see we have credited goodwill. That's why we have deducted here this impairment loss. We have deducted it from goodwill, right? But
Yes.
debit income statement, debit the statement of profit or loss. We don't have the statement of profit or loss here. We have the statement of
Yes.
financial position. Statement of profit or loss is just like an extraction from the statement of financial position of a single component of equity, right? So
Okay.
what we need to know is if it's full goodwill, you need to break it down. A part
Okay.
goes to group retained earnings, which is a group equity, of course. But if you say group retained earnings, it means it is a specific component of equity, not just the equity. It's equity under retained earnings, right?
Okay.
Have the non-controlling one, interest. You break it down twice. In case it was the partial goodwill, it means everything would have gone to group retained what? Earnings, right?
Yes.
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 So let's look at what we have done. In the books, we have already deducted, we had the separate working for goodwill, so we have deducted it already here. But on the non-controlling interest working in the group equity working, we haven't dealt with it. So we have to go and incorporate that, right?
Yes.
So you could say, this is group retained earning. Let's go to group retained earning. I think we have the working for group retained earning. I think we established it that day. Group retained
That's
earnings,
the goods in cash in transit and the
goods and transit. Okay, here it is.
use that. Yes.
Yes, it's here. Okay, now, okay, I think, maybe let me just shift it. I think I don't have to let me just shift it. I'll just take it. It was working for. Let
Yeah.
me place it down here. Yes, here it is. So I could just say after here, we need something called what? Impairment loss. Impairment loss of what? Of goodwill, right?
Okay.
How much? Equals to, where did I get it again? Okay, it's here, 2075, right?
Yes.
Yes, and then we have to also debit the non-controlling what? Interest. So
Interest.
we could also have a working for non-controlling interest. I could say here it was after after working 7, I could say working after working 8, yeah? Let's say working 9 here.
Yes. Working nine.
It's working 9 here and say non-controlling what? Interest.
Interest.
I'm doing this first question to show you that you can do it as you wish. You just need to know that at some point I need to get it right.
Okay.
There is no bad thing like saying, okay, this is here, I'll put it later. Don't say something like something later in an exam. Whenever you find it, you need to establish the specific working and do it. Unless maybe you have said your working 1 will be this, working 2 will be this, and you have left the spaces. Okay,
Okay.
so the non-controlling interest would go there and say to the impairment loss of what? Of goodwill, right?
Okay.
Yes. And I would take the negative side, which is 69 what? 692. Just like,
92.
yes, right. And after doing that, we go to the goodwill, of course. Of course, I would come and deduct the impairment loss from goodwill, and they have deducted it already, like you see it there, right?
Yes.
Yes. Of course, we already have the goodwill figure. I think we can take it direct. We have the goodwill figure at 7233. So you can just go to the statement of financial position here, non-current assets. Non-current assets, what else did we have? After non-current assets, we had these investments, right? We had the financial
Yeah.
assets and maybe we have the goodwill. So you can just come down here and say, okay, maybe after this one, I could say I have the what? The goodwill, right? Yes, we just say goodwill here. Goodwill, then which working? It was on working how much? Working what?
Seven.
Working 6,
Six.
right? Yeah.
Yes. 6.
So the examiner just needs to know on what working you did something, right? You don't need to
Okay.
memorize. Okay, this usually, there's some people who say, okay, This one should go to this working. See, you don't have to do that. So we could just say that equals to, you come to your figure, which one here, right? And then you press the
Yes.
enter, it gets there, 72333. You see,
Okay.
your statement gets
Yes.
accomplished. Okay. Then we go to, let's go next. There is something you need to know now, right? I need to explain something else here. Of course,
Okay.
mostly it is not explained, and even here we haven't done it already. You see, let's explain this and you would understand it perfectly what I'm trying to say. You know, this share, we are told only the cash consideration had been recorded, but the share exchange had yet to be what? Recorded.
To be
Right.
recorded.
What do we mean by this? It means this is the double entry. We also need to pass it to in your books, right?
Yes.
I'm going to debit the investment cost, which means I'm going to increase it. You see that? So
Okay.
let me try to do something here. Just need to understand what goes on. Look here. We have we have the investment in Sony and other at how much? 26,500. Yes,
500.
26,500. Let's write it. Let's presume that we don't know what it is, and we have just said, we have just written it as investment. Just presume something like this, right?
Okay.
I've just said investment. You don't know. Sometimes in an exam, you have the normal investment here, you have the investment in associate, and you have the investment in a subsidiary. So you could just say there investment. Write the investment, and you say we have our figure at how much? 26,500, right?
500.
Yes.
Yes.
Okay, I'm writing it to here, 26,500. I'm presuming that I'm not going to change anything. But now let's face the reality, right? First of
Yes.
all, like you see here, we have debited the investment cost, which previously wasn't there. So we have increased it by how much? 18,000. Am
18.
I wrong? It's fine, right? So I'm adding there by how much? By 18,000.
18,000.
It's fine, right?
Okay.
Yes. And then we go to the other side of double entry. What do we do? Credit share capital and then
Share
credit
cap-
what? Share premium. Remember, this is the investment cost the parent pays. So whatever is done by the investor, by the parent, is not shared. It goes to the books of the parent, right? You get that?
Okay.
Whatever is the investment cost goes to the books of the what? Of the
Of the
parent.
parent.
So don't even think of sharing it. Or ask yourself, okay, is this share capital, does this belong to Sonia or to Pauline? No, this is usually goes to the parent because it is the parent that is paying, right? So I would
Okay.
say, okay, let me go to the statement of financial position under equity, I think, right?
Yes.
Yes, let's say here we have equity
Which
and liability.
liabilities.
Yes, and then we start with the equity itself, right? Now, on equity,
Yeah.
when dealing with consolidated accounts, we have two components. We have the group equity, the group what? Equity, and then we have the non-controlling interest. You see that?
Yes.
For the group equity, you explain each single component. For the non-controlling interest, you just take a single figure, right?
Okay.
So when you go to the group equity now, you would come and say, okay, I am adding the share capital and the share what? Premium. Share capital equals to how much? 3,000, right? Share capital?
Yes.
Yes. And
3,000.
capital
So you've gone.
have gone. Okay.
Yes.
It's here, share capital, 3,000.
Yes. Yes.
And then share premium, 15,000, right?
Yes.
Yes. Okay. On the actual solving, I would just write it here. Equal to 3,000 and share premium, I would say equals to 15.
1,000.
Like that, right. So after having done that, we'd say, okay, I passed the double entry and I have actually used it. Now, what was the aim of actually, in reality, I shouldn't have included this investment cost, but I've done it intentionally. We come to the meaning of goodwill. I told you that whenever you record goodwill, what do we mean? It means you remove the investment cost, you replace it with what? Goodwill.
Goodwill.
Remove the net assets, which is the equity of subsidiary, you replace it with what? Non-controlling what?
Non-controllable interest.
That's what I said, and that's what I see now. When we do compute the goodwill, it means we are removing the investment what? Cost.
2500.
25,500. So come here on investment cost, right? Investment cost, it's here, right? It's like I'm
Yes.
going to remove that 25,500. Where is it? It's here, 25,500. You see?
Okay.
I've removed it. So you see, you can see here now, 25,500. I added something, but I'm also going to remove what? To remove something, right? I've removed it. It's fine. And we are done, right? With that.
Yes.
The other thing I said that you are going to remove the net assets and replace it with NCI, right?
Yes.
The net assets, we are removing it, and that's why I'm not going to put this. Net assets of subsidiary, it means the equity of the subsidiary. And the subsidiary was at the middle, Sonia here, right? You can see it's equity.
Yes.
Equity of Sonia, this 8,000, 12,000, 5,800. I'm not going to write it there. I'm going to break it down and only leave NCI. That's why you won't see it.
Okay.
That was the meaning of what I was saying, right? Okay. So I think we can go on now. Let's go on. If you go through this, you have gone through this, you have gone down here, Sonia, this figure. These are the figures for other. These are the figures
Yes.
for the associate, I think. It's not,
Yes.
but no problem, we can deal with it. Let's deal with it and finish it off too. We are told 30% of equity shares of other were acquired at a cost of how much? $7.5 per share in what? In cash. Okay. So that one should be the investment in the associate now, right? Investment in
Yes. In
yeah,
associate.
ended with working 9, so we could say working 10 here. I could come here and say, okay, let's go to working 10 and can say investment in associate. Or we could just say investment in other. So how do we get it? We could just say investment at cost. We usually try to get the cost first. So how much are you going to get? We say that we acquired 30 per what? 30% of shares of other. Yes. How many shares did other have? We have to take only the 30 per what? Percent of the shares in other. So 30% times the shares in other. How can you get the shares in other? Can you tell me how to get the shares in other? Shares in other, if no information, you have to go to the equity as usual. You go to the share capital or written as equity shares here, right?
Yes.
Okay, its book value is how much?
8,000.
8 million.
8,000.
Yes. It's actually 8 million
Okay,
divided,
yes, 8 million.
divided by 1, right?
Divided by 1.
Yes.
A nominal.
Yes. So I would say 8 million, which we say 8,000 for the sake of simplicity, and we divide by 1. So we would get 30% times 8,000 is like 2,400, yeah?
Yes.
Those ones are the shares acquired. Shares what? Acquired. But look, we are told 30% of the equity shares of other at a cost of 7.5 per share. So each share was bought at how much? 7.5.
7.5.
Yes. So if you do multiply there, you'd get 18,000. I hope you can see that. You have 18,000.
Yes.
Yes. So after getting the 18,000, you would say, okay, so this was the investment in associate. This is what we usually do. But no worries, we don't need to do any double entry because we are told all the cash considerations had been what? Had been recorded.
Recorded.
Right? Yes. So what we need to do here is we usually have the separate line for the investment in associate, just like equity accounting requires us to do, right?
Okay.
We should have a separate line for the investment in what? In associate.
An associate.
Yes. So you could just say, okay, if you just write a separate line and say investment in what? In
An
associate,
associate.
or which is other. And how much are
So
you
it can be included in the considerations, in our consolidated statement.
in the question? They told you that they had included it. That's why you see, yeah, investment in Sonia and other.
Okay.
So
Okay.
yes, they may bring the way they wish. They just try to confuse you.
Okay.
Yes. So
Okay.
it is there already. So what I do is I've already established the separate line item. So I'm going to remove it from that investment figure, right? This one. It was
Okay.
18. So I'm saying that I'm going to reduce that how much? That 18, right? Let me write
Yes.
figures. Maybe you should be. But I think what I'm doing is fine. I should be pointing to be fine. You should know that, okay, I removed what? I removed from here 18, right? You see, we remain on the investment line, we remain with only 1,000, right? You see,
Yes.
without worrying, because remember, right now we already have the working for what? Investment in your associate, and it's working 10. So you could say investment in your associate, you open the brackets, you write there it's working what? In 10. And
Mm.
you proceed, yes. So if you go any further, what are you going to get? It has been written here that only the cash consideration of the above investment has been recorded by Pauline. In addition, 1,000 of professional cost relating to the acquisition of Sonia is included in the cost of the investment. You see, this question, this question had actually a lot of matters. Eh?
A lot of issues.
Yes, it means you have to do the correction of errors. You see, professional
Yes.
cost should be expensed, but they put it under non-current assets. This is the correction of errors, right? Something which is not an
Yes.
asset, it has been capitalized, and then it is like an asset. So it's simple. You have to pass the double entry to correct the entry, right?
Yes.
Yes. So let's go and say we could write here and say working 11. You can just say correction, yeah. You could just say correction
Preference.
of errors, yes. Or on what? On professional course. And the ACCA like to test people on this. They just try to test that this person understand. Let us do this intentionally. So you always see that, okay, so our investment cost was kind of inflated, yeah? So we need to reduce it. So we credit the investment cost because it is an asset and you need to reduce it, right? Investment cost,
Yes.
you credit by how much? 1,000, like you have agreed.
1,000.
Yes, like by 1,000. Let me write it here so that you can see. And then we say, this should have rightfully been expensed. Hmm? It should have gone to the statement of profit or loss, right? But remember, it is the parent that paid, eh? So it should have affected the profit of the parent, not of the subsidiary. Whenever something affects the profit of the subsidiary, that one is shared between parent and what? And
And subsidiary.
parent and NCI, or I mean group and NCI. But this was settled by the parent. So it goes to the group retained what? Group retained.
And,
Something that
and
goes to group retained, it means it is not shared. Right.
okay.
So by the same
Okay.
figure, which is also 1,000, just like that. So you can see. So I'm going to remove that investment cost to reduce the investment cost by what? By 1,000. Eh? We had the investment cost here.
Okay, zero.
What am I going to do? Wait. What is this? Okay, we are going to reduce this by what?
1,000.
1,000.
By
Fine.
1,000 to be zero.
It will be 0. You see, wait. What is this? What is happening? Okay, I did wrong.
There's this sheet in the form. Okay, that's accepted.
Like you can see, so initially we had this 6, and then we added what? We added 18,000, eh?
Yes.
Yes, which was the share, well, with the shares. and then we came and deducted the how much?
There you go.
And then we came and deducted the 25,500. I just need to put the proper references for you. Deducted 20.
Yes. Otherwise, when I go through, I may get lost.
Yes. So it was 44 minus this one, it was 19, and then we deducted the 18,000, which was for the, and then we deducted the 1,000 lastly, right? So if you do this, you see,
Yes.
okay, so this should have been 0. So it's like it shouldn't have been there. I just try to show you how it would have been settled, right? Of course,
Yes.
it should be very rare. For example, on my side, I've done a lot of questions. I've solved a lot, but finding a question having these matters, of course, or even professional fees having been made wrong is rare. But we have to be ready. Okay,
Okay.
so everything should have been fine here. What working haven't we gone through? I think it's only the last one. Yes, I think it's only this one.
Yes.
It says,
Financial aspect.
okay, the financial assets in Pauline's statement of financial position are classified at fair value through profit or what? Of course, this is
Follows.
about financial instrument, but it is clear that whenever whatever financial assets you have, you measure them at you measure them at fair value, right? And any gain or
Okay.
loss goes through the statement of profit or what? Or loss. For some assets, you'll be told they go through other comprehensive income. So they have told you specifically. So you don't need to worry about anything. In the draft
Okay.
financial statements now, they are held at their fair value as at first April 2022 X what? X7. This was the beginning of the year, right?
Yes.
They have a
Yes.
fair value of 18 million is at 31st March. So by the end of the year, they are worth 18 million, right?
Okay.
So I think this one is simple. You can just do it even without passing the double entries. You have the financial assets here at 10,000, right?
Mm.
Yes. So financial assets at 13,000. We could just put them, just put something here. Let's say you have the financial what?
Assets.
Financial assets at, okay, right now they are worth 18 from 13, right? If you pass the double
Yes.
entry there, it would be like they have increased by how much?
By 5.
By 5. So it was 13. It was 13. If you increase it by 5, it was 13 actually. Then you increase it by how much? By 5.
5,000.
Yes. That's what the double entry should be. So you debit financial assets by 5, right? Which would give you how much? 18, right?
18,000.
Yes. And then you also have to credit the gain. And that gain goes through profit or loss, right? So that we should have
Okay.
a gain of 5. But now you understand. Like I told you, whatever goes to profit or loss and whatever goes to the income statement and it belongs to the subsidiary, you have to share it. But here, this one does not belong to the subsidiary. They are speaking of Pauline, right? So whatever
Okay.
it is owned by the parent, it just goes direct to the group equity. If it went through profit or loss, then it would specifically go to the retained earnings component of group equity, right? So
Okay.
it's okay. So that 5,000 should go to group retained what? Retained earnings. And I would say
Mhm.
it should be like the fair value gain, right? Fair value gain
Yes.
financial what? Financial assets. So
Assets.
it was 5,000. Yes, like that, right? So after that, I think everything should have been fine, should have been done well. And what will only remain with, I think, is only these numbers. We hadn't dealt with these numbers, yeah? Let's just go these numbers,
Yes.
add them together,
Okay.
yes. So we start with PPE.
Yes.
We had
Yes.
36,800 plus 20. Do you add this
Yes.
or you don't add the other?
Uh, Other is associate.
Other is associates. So we do not consolidate the
So we
associates,
just
right?
add
And
Pauline and Sonia.
yeah,
Yes.
so 36,800 plus 20,800, right?
Yes.
36,800, we had the plant here. So we could add it, or we could even put it before, whatever you do, right? Let's say this is
Okay.
800 plus 220. It is
8,600.
820, or is it 20? Yes, it is 820.
8,800.
Yes, and then I could comfortably say that no, I'm going to close the brackets, and then I'll do the same here, right? I add 36, 800, and then I add 20, 800, right?
200.
We have
Yes.
something like that. That would be fine. Then we go on. The
Thank
second line, investment in Sony and other. Okay, I think this one is what became zero. So we don't
you.
need to deal with the 18.
Yes.
Then also for financial
Yes.
assets, we already have our 18.
You did it.
Okay.
Yes.
Then maybe we had our thing here. Yes. What did we have here? We had the investment in what? In associate. It was in working what? Working 10, right? Let's finish it.
Yes.
Working 10 is here. Now, whenever you are dealing with the investment in your associate, it is very simple. You start with the amount you invested, which was the investment cost as usual, and then you add any increase in equity in a any increase in what? In equity, you multiply by the 30%. Because yeah, it was only 30% owned, right? So you can go and look at the profit. You can go to the income statement, or we don't have the income statement here, you can just go to equity direct, right? So near,
Okay.
this is other. Our society is other. So you can just go here. This is its equity. Of course, equity usually does not change when you speak of the share capital. They usually do not change that because the percentage of ownership would also change and it would be very, very difficult. On retained earnings, also, for some questions, they would give you retained earnings at the acquisition and maybe retaining at the end. But this question, they didn't want all that trouble. That's why they broke it down. They gave you the balance at the beginning and what transpired during the year. So it's like you already have what happened during the year, which was how much? Profit for the year was 10,000, right?
Yes.
Yes, it's 10,000. So you can just pass that. So that's why you call that, we say that for associates, we do the equity accounting. It means we only deal with the increase in equity and it goes to the associate and also it goes to the group equity direct. No issues. We don't have to worry at all when dealing with what? With the associates. So you just say the 30 per what? 30% of what? You take the 30% of we could just say I like to call it post-acquisition what? Reserves. Just like what we did with Working 2. Do you remember with Working 2? Yeah. Net assets. We get at acquisition and at reporting, we get the difference, which we call post-acquisition reserves, PAR. PA what? PA. But now we are dealing with that of an associate, not the subsidiary, right?
Okay.
Yes. So on our case, we would say 30%, what transpired from acquisition to reporting is 10,000. That was the profit. So you get your 3,000. So whatever you get on the increase here on investment in associate, whatever comes here, you have to note this. Whatever comes after the cost should also go to group equity. Group what? Equity. But when you also see this figure was wholly came from retained earnings. So it should also be reflected in the group equity, but specifically in group retained what? Group retained earnings. So I also say 30% times as usual. The acquisition what? Reserves of associate. It is of what? Associate. Yes, we can mix associate. And like we said, it's 30%. Oh, I think we may just take it here. Yes, you see. So that's what we do. Okay. How can you get the total now? Let's get the total. The total should be how much? 18 plus 3,000, which is 21,000, right? Yes. So we can just come here and say, okay, our investment in associate is how much? 21,000. 21 here. Okay, we have it there. Okay, let's go to goodwill. Goodwill, we have it already. Let's go to, I think the non-current assets have been done. We are done with non-current assets, yeah? Right.
Yes.
Yes, so we can just go and get our total. What should be our total? Here we could just say total non-current assets. So I'm just going to sum all these figures, right? And I'll get that one. I hope you saw that. Oh,
Karibuka.
hello?
Yes, now it's okay.
Okay, so let's go to the current assets. We have the total for non-current assets already. On current assets, we have inventories. Did we have it here again? Yes, we had our inventory too here, right? We could just say current what? Assets, right?
That's it.
Okay.
Yes.
The inventory here, we also just take, we said we add the, what? Parent and subsidiary. So 13,800, 12,400, right?
Yes.
13,800 plus,
And 400.
let's say 13,800 plus 12.
400.
Yes, we get that figure. And then we are done. We come down here. We have the trade receivables. 6,400, 3,000, right?
Yes.
6,400, then 3,000. 6,400, 3,000. 6,400, 3,000. We have it there ready to. And to assets, eh? Okay. So you're also done with the non-current, with the current assets. With the cash, we have the cash here, and we had no any information on cash, right? So
Yes.
done. So we could say, let's get this off. Let's get it off and just remove these ones, and we now would have the total non-current assets. Total current assets first. How much should we have the total current assets? That one, right?
Yes.
Okay. Let's now get the total assets.
That's it.
Total. What am I doing here? What am I writing? Total. So about the total assets, we have to add these two figures. The first one, total non-current assets plus total current assets. We have that one too, right? Or maybe you could shouldn't we put it here? Maybe we could even put it there. This one
Okay.
plus this one. We have a total figure two there. Okay, now let's go to the equity and liabilities.
Equity and liabilities.
Yes, let's just shift these figures of ours. You could just shift them, right?
Yes.
Yes, let's just put them here. Okay. The trade payables, and okay, let's delete these two. So here we are, equity and liabilities. Okay, for the equity, you have the group equity, which would have the share capital. Let's get our share capital again. Equity shares, certain equity shares here, 20,000 and 8,000. Remember, we say that we are not going to consolidate the equity net asset of subsidiary, so you only take 20,000, right?
Yes.
Yes, okay. So
8,000 has been done already.
yes. So you just take the 20,000 there, you close. Maybe you just come on this side and you add it to 20,000, right? You would have the
Yes.
20,000. And then you go down and you have the retained earnings. For this is the group retained earning, you have to take it. 32 plus 18,500. They are together, right? 32 and 18.
Yes.
Yes. So 32,000 plus 18,000.
18.
Okay, this is group retained earnings. We would just say group what? Group
Retained.
retained earnings, right? You know, this was on the working, I think. It was on a certain working. Group retained earning, it was here, right? So you could just
Yes.
get the total there. How much should it be total? What is happening, my friend? Okay, it's there. It's just there. Yes, I don't want this 51.25. So just say the group retained earning. Which working? I forgot. It's working number 4. So just come here and say, that is working number what? Number 4, right? Yes.
Yes.
So you just say equals to, and you go and get it. It's working number 4, that one. You have your figure there. And if you go down, nothing else, right? Nothing else for equity. So you can say that you already have the group equity. You can say total what? Total group what?
Group.
Total group equity. Yes. You could go on and sum D3.
So you've gone.
I'm saying you could go and sum D3. Should be 21. So how much? 23. Yes. So we have it there again. We have our figure there. Group equity. Then we have the non-controlling interest too. We need to get the non-controlling interest. Which working? We just go and get it. Non-controlling interest. Which working number? Okay. Okay. And there is something else. There is something else here. Uh, you see, like I told you, when you're dealing with working number 2, you always need to, you see this post-acquisition reserve, we compute it because we are going to divide it between the non-controlling interest and what? Let's remove this group. Yes, you break it down between the non-controlling interest and what? And the group equity. Yes, you have to break this down. This is the main aim of getting this. So whenever you get this, right, you may come straight away to group retained earnings. Let's start with non-controlling interest. You come to non-controlling interest and you say non-controlling interest was how much? 25%, right? So you say 25 and you multiply by that figure. How much was it? It was 47.67, right?
7.
Yes, and then you do the same. You do the same here, and you take 75% and you multiply by that same figure. How much was it? It was 47.67.
767.
Yes, 47. What may I do? Eh? I didn't get it right here. 47.67. What am I doing? Okay, I don't know what is happening. Uh, my friend, I don't know what I was doing. 47 is the phase 7. That's why it wasn't agreeing. 47.67. Right.
You've put time is twice.
I don't I was trying to keep up with this time, and this is what has happened. We had some seconds. Okay. No problem. It's going to cancel, right? It cancels and we finish up, right?